This is all about Bitcoin, a show dedicated to all things questions and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. I'm your host, Christine Lee. Let's have a live look at Bitcoin right now. The CoinDesk Bitcoin price XBX index right now just over $60,000. Bitcoin is down about 6.5% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as a leader in crypto news, events, and data. So taking a look at our top stories, what's moving the crypto markets right now? Well, China's top National Development and Reform Commission is considering, quote, punitive electricity prices for some crypto mines as part of the next stage of its crypto mining crackdown. The country's top economic planning body might implement this measure for companies that mine crypto but only pay residential electricity prices, according to an NDRC news conference. Meanwhile, shares of Riot Blockchain down about 10% after the Bitcoin miner's third quarter revenue and earnings missed average analyst estimates, according to FactSet data. The miner saying it increased the Bitcoin production by nearly 500% to a record of almost 1,300 BTC. Meanwhile, crypto Canadian miner Hive Blockchain reported record revenue of over $50 million in its fiscal second quarter, up 305% from the same period last year, but shares are falling 1.5%. Finally, the VanEck Bitcoin Strategy ETF begins trading on the Chicago-based Cboe exchange today. Trading under the ticker XBTF, it is the third Bitcoin futures-based ETF to be trading in the United States among a growing field of competitors. Joining us now to discuss is VanEck Head of Digital Assets Product, Kyle DaCruz. Hello there, Kyle. Thanks for joining us. So, just first off the bat, I would like to get your reaction to Bitcoin's fall today. Is it based on China jitters or just a healthy correction?
In my view, it's a healthy correction. And look, we're not in the business of price predicting for Bitcoin. We're in the business of offering investors long-term exposure. And so that's why we're excited to launch Bitcoin Futures Strategy ETF, XBTF.
There are a growing number of Bitcoin futures funds out there, such as ProShares, Valkyrie. So how are you differentiating yourself from the other Bitcoin futures funds out there?
Sure, absolutely. Well, I think there's two primary differentiators, and one is cost. So as of today, we are the lowest cost Bitcoin-linked exposure ETF in the market at 65 basis points as a management fee. And the second is the tax structure. So we structured XBTF as a C Corp, which may have a better after-tax return experience for long-term investors than as those in an investment vehicle structured as a RIC, a regulated investment company.
Mm-hmm. Yes, I see you have a management fee of about 65 basis points compared to ProShares and Valkyrie, which have a fee of about 95 basis points. But is there any concern that the market is getting saturated?
I don't think that. I think, at least for now, there's plenty of space in the market for three. And in addition to that, I think what differentiates our fund from the others gives broad exposure to investors for multiple ways to access the fund. And so, again, we feel that the C Corp structure is a great differentiator in offering long-term exposure to Bitcoin futures.
Is there also concern that about first mover advantage? You know, ProShares was the first to get it out of the gate. They have big trading volumes, a lot more assets in their fund. So is that a concern that the SEC, approved them first and they're the first out of the gate?
Sure. Of course, we would have loved to have been first to market. As you may know, we were the first to file in 2017 for a Bitcoin futures ETF. However, we feel very strongly that our price point, as well as the C Corp structure, are strong enough differentiators over the long term to really have a great offering in the market.
And I understand that you also tried to VanEck tried to file a spot Bitcoin ETF, correct? Perhaps you can go over the trials and tribulations over that, and when we might in the United States see a physical Bitcoin ETF, if ever.
Sure. Well, I'm certainly not in the market of predicting regulatory approvals or denials, but I can say, of course, we were disappointed in the decision. It wasn't completely unexpected, as regulators have made it known what they're looking for to allow a physical spot product in the market. I think for now, we will continue the fight to bring a physical spot ETF to market eventually. And until then, we're very excited to allow investors access to a Bitcoin futures index ETF.
Why do you think the SEC was more comfortable with a Bitcoin futures ETF versus a physical Bitcoin ETF that frankly tracks Bitcoin a lot better?
Yeah, sure. I certainly, and again, we've been completely transparent in the hurdles that a Bitcoin futures product will have to overcome, including the roll yield situation. And on our website, there's plenty of materials addressing exactly these points. I think certainly that the structure under a 40 Act vehicle and the investor protections afforded to this fund are some of the benefits that the SEC has been touting. Outside of that, I really think over the long term, you will see a spot product in the market. When that may be, that's to be determined.
Okay. What do you think will get SEC Chair Gary Gensler over that hump and eventually be in favor of a spot Bitcoin ETF?
Yeah, look, I think it's on sponsors such as VanEck and others in the market to really educate the public and hopefully help regulators come to that decision point. I think we'll get there eventually. We're going to continue to work and move toward that.
Okay, just one last question. You know, with these Bitcoin futures ETFs, you're still paying a premium. So what investor would benefit from this over buying Bitcoin directly or crypto-linked stocks like Bitcoin miners? I mentioned Riot Blockchain earlier, and or MicroStrategy or a Bitcoin trust fund.
Sure. There are a lot of ways for investors to access Bitcoin and other digital assets today. However, it's our job and responsibility to give as many investors access to those investable opportunities. And frankly, the opportunity to invest in a regulated exchange-traded fund is a pretty significant benefit on its own. And so we believe by giving investors this tool in their portfolio to hold Bitcoin-linked exposure in their brokerage accounts is a pretty outstanding and remarkable achievement.
Yeah, well, Kyle, congratulations on getting it off the ground. It has been a journey, a marathon, in getting Bitcoin-related ETFs in the market in the first place. So thank you for joining us. That was VanEck, head of digital assets product, Kyle DaCruz. Coming up, Bitcoin price analysis with merchant bank Broadhaven Capital Partners.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
Bitcoin falling below $60,000 during mid-European trading hours today, extending early weakness and testing the 50-day moving average for the first time since about October 1st. Analysts saying a pullback was expected and has normalized the elevated funding rates or costs associated with holding long positions in the perpetual futures market. CoinDesk's Amkar Goboli writing, the sell-off began in Asia following the Twitter CFO's comments that buying crypto wouldn't make sense for the company. There was continued strength in the dollar index, seemingly due to forced unwinding of long positions by exchanges. Crypto trading advisory firm CEC Capital telling CoinDesk market makers are getting rid of their risky exposure. Leverage and delta hedging becomes more expensive as more orders flood the market. The average funding rate across major exchanges reached a 6-month high earlier this month. Costs associated with leverage typically become a burden when the momentum stalls, forcing traders to liquidate. With the pullback, the average funding rate has reset to about 1 basis point. Joining us now to discuss the Bitcoin price and analysis is Michael Sidgmore, co-founder and partner at Merchant Bank Broadhaven Capital Partners. Welcome to the show, Michael. So, is today a fire sale for Bitcoin or a buying opportunity, or are we headed for a leg lower?
First of all, thanks, Christine, for having me on the show. Look, I think there's certainly a pullback. Maybe this, the Taproot upgrade to the Bitcoin blockchain was priced in, but I think I at Broadhaven focus on our early stage venture business. So we're investing into companies that may have exposure to tokens, or we're investing in their equity. I think longer term, I wouldn't be terribly concerned about pullback in Bitcoin prices. Reason why is because I think there's clearly been institutional demand. I think there will continue to be institutional demand from investors, both individual investors, and then on the institutional side, proof points like Neuberger Berman BlockFi partnership, Galaxy and Invesco intending to build a crypto ETF, iCapital putting Grayscale on their platform. So I think we're seeing a ton of interest from the wealth management community, which over time, I think they'll go into the blue chip assets like Bitcoin.
There's certainly been a lot of investment into the space, and that probably explains why we're here at the 60,000 level that we're at today. But what do you think is still causing the drawbacks on Bitcoin? Could it be China? Could it be a company like a giant like Twitter saying, they're not yet ready to invest in Bitcoin? What do you think causes these drawbacks? Or it's just a healthy correction?
Yeah, look, I think one is it may very well be a healthy correction, right? I think there's been a kind of 40% run up or so in the past few months. So, Bitcoin is obviously priced in, and again, maybe some of these things have been priced in a bit. So, when I think about this, I think that perhaps it's priced in. I also think that people are very excited about some of these other crypto assets and blockchains like Ethereum as well. I think institutional interest is there as well. So perhaps that's some of it as well. But again, long term, I'm not terribly concerned about the blue chip assets, because I think that's how institutions will dip their toes into the crypto economy, is through big blue chip assets like Bitcoin and Ethereum.
We just had VanEck on, which launched their Bitcoin futures-based ETF. Is that something that your firm would ever be interested in?
So we would invest into the company itself that's building that. We've seen a number of companies, and there's the likes of Bitwise and 21 Shares, and newer companies like Alongside, which is trying to build a DeFi index. I think there's going to be a lot of innovation at the early stages, just like there was in the early days of the ETF market, right? I run a podcast called Alt Goes Mainstream, which talks about the mainstreaming of alternative assets, both for individual and institutional investors. I had the CIO of Bitwise on. He helped build the ETF industry. And I think there's a lot of similarities between early days of the ETF industry when, BGI iShares ended up getting bought by BlackRock. There was a lot of product innovation and companies being created to institutionalize the asset class. I think we'll see the same here. I think it's great that companies like VanEck are building products out for both individual investors as well as institutional investors, because that's what helps more capital come into the space. As you get more institutional capital coming in, that reinforces itself on the retail side, given that there's just more institutional demand and then trust for this asset class as an institutional quality asset class. So I think what VanEck is doing is great. And I think we're seeing a lot of innovation at the early stages of companies that are building products for the institutional investor.
Right at the moment, because there is there's a hefty premium, and there are other ways to invest in Bitcoin.
Correct, and we invest into equity of early stage companies as well. So investing into a public markets product would not be a fit for us.
Michael, what's your end of year outlook on Bitcoin?
Yeah, so look, I think that generally Q4 tends to be a time where Bitcoin ends up rising. I think we saw this kind of 2017 run up. I think, again, there's a lot of interest in the crypto markets from both individual and institutional investors. I will say, in talking to a number of wealth managers, there's a lot of interest from their clients in crypto assets, given that it's captured much of the zeitgeist. So I'd anticipate that people continue to be interested in these assets. I would think that, look, the institutions are going to allocate to the blue chip assets. So Bitcoin is going to be something that they're going to look closely at. And I think I'd expect it to perform pretty well.
You have a price target?
I do not. Again, I'm an early stage venture investor, so I'm not in the business of projecting price targets. But look, I hope it goes up for the space. I think again, just more institutional proof points, and that shows that Bitcoin's a great digital store of value, ends up being a positive thing for the entire crypto economy.
All right, Michael, no laser eyes yet for you. I get it. All right.
I live in a multi-coin world.
Oh, all right, fair enough. Thank you for joining us, Michael. That was Broadhaven Capital Partners partner, Michael Sidgmore. That's it for All About Bitcoin. I'm your host, Christine Lee. We'll do it all over again tomorrow at 3 p.m. in New York. Also join us tomorrow morning at 9 a.m. for First Mover. You're watching CoinDesk TV.